Good morning, everyone. Once again, this is Black Forex coming to you with another market analysis video currency pair breakdown. Before we get into this market analysis currency pair breakdown of the Euro USD, we have to state that this video is for educational purposes only. This is not financial advice. But we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and that can help put some extra money into your pocket. Okay, especially in these times of high inflation and ever rising gas prices. Okay. Now, with that being said, let's go ahead and break down what's happening with this currency pair and what's happening on this chart. Okay. Now, if you guys have been watching the Black Forex analysis videos for some time now, you will understand that we love to discuss what's happening with the fundamentals before we happen with the technical analysis. The reason why we do that with that order is because everything we do here is purposely. We don't do anything non-purposely, and we're trying to give you breadcrumbs so that you can learn how to be better traders. And what you have to understand is fundamental analysis comes first, technical analysis comes last. That is the last thing that you do. The first thing you do is see what factors are causing these currencies to behave in what manner. Okay. Now that we got that out the way, let's discuss the fundamentals of happening with the Euro USD. Now let's discuss what's happening with the Euro. Now, we did have some good news come out at the beginning part of the trading week for the euro. We did have some negative news, but we definitely have more positive news than negative news coming out about the euro. But as we started to approach this mid part of this trading week, we are having more negative news than positive news come out about the euro. And then we also have to talk about the dark clouds that's surrounding the euro as well. Now, these dark clouds is ever increasing inflation being catalyzed by rising gas and fuel costs, and also the geopolitics that's surrounding the European continent's economy through sanctions on Russia. It is very evident clear at this point that the sanctions on Russia is not hurting Russia as much as as much as NATO and America would have want them to or wanted to. It's very clear that these sanctions are actually having more of a negative effect on the entire global economy than it is on Russia's direct economy, with the Europeans taking the brunt hit of this negative effect. So it's affecting America too, but it's affecting Europe ever more so, to the point that we are looking probably at more so at, we can safely say we're starting to look more so not at inflation, but about to be in European full-blown recession within the next 60 to 90 days. This very easily can happen. Okay. And then also we do have the fear, uncertainty, and doubt surrounding the entire European continent's economy due to the war between Russia and Ukraine. And we were having some peace talks that were looking up, but it did look like Ukraine walked away from the table on these peace talks, which means there's going to be a continuation of hostilities. As long as there is a continuation of the hostilities, we're going to see further destabilization of the entire European continent's economy. Okay, so with this with this war between Russia and Ukraine, look like it's going to be going on for more of a long-term period, with the increasing inflation and fuel costs and the negative ripple effect of the Russian sanctions having on the entire European continent's economy. This is all a prime recipe for recession to hit Europe, and hit Europe very, very hard. Okay. So, with all this said, we're going to see a continuation of the weakness of the major three European continents currencies, which is the euro, the British pound, and the CHF. So, we will continue to see a weakening of these currencies as long as the geopolitics um, are lingering, and also also coupled with the inflation and the increase in gas prices. Okay. Now let us talk about what's happening with the USD. Now the USD, prior to the opening of the trading session of the New York trading session Tuesday at 8:30, going into the trading session around 10 o'clock Tuesday, we did have a lot of news come out. We did have some negative news, but we had more positive news than negative news come out about the USD. Okay, so with that said, we also had um, oil news come out around 4 p.m. Eastern time at the latter part of the New York trading session, which reported that there was an increase in supply of oil in the circulation of oil around the world, which brought down the prices per barrel per oil, which you're going to see a lowering of gas prices at the pump. This lowering of gas prices at the pump means that Americans have more money to spend in the stores than at the gas pumps. More money getting put into the economy means a growing economy. A growing economy means a strengthening of the US dollar. Okay, so now that we got all these fundamentals out the way, let us discuss what is happening on the charts. Okay, so as we can see, we did have an initial drop in price since about latter part of February, which was when the war started between Russia and Ukraine. And then this was the first time they said peace talks were happening, price drop. Second time they said peace talks were happening, price drop. Third time peace talks were happening, then we had more of an aggressive price drop. And this is because inflation in Europe grew tremendously. Okay, so with the inflation, with its own economic woes, coupled with the geopolitical events and the anticipating negative effects that's going to be happening on the European continent's economy due to the sanctions, we're seeing a weakening of the euro. So we were staying within this range, with this upper part being the very upper extreme of our range, and this lower part being the lower extreme of our range. So we did have that develop. We were staying within the range where every time we got to here, we dropped. Every time we got to here, we shot up. But due to the weakening of the euro and the aggressive gaining of strength of the US dollar, we are slipping down to the lower extremity of our range. Okay. So there's several different ways this can play out. We could bounce up from here, get as high as here or possibly here before we go back down. Or we could range from this area here and continue to slip down. Or we can have an initial bump up to right here, range out, and then continue to slip down even lower. Okay, so let us go over those scenarios one more time. We could have a bump up from here to here, then we start to go down. Okay, we could range out some, come up to this general area here or here before we range out and price continue to slip down. Or we could range out from this area here between here and here, then continue to see a slip down in price. Okay, I hope that information was helpful for you guys. Happy trading.